Silver's bull run hit a CME circuit breaker, but the cycle won't stop. Money is unraveling, confidence is eroding, price signals are returning, and silver is leading the way. The bull run didn't pause, the exchange did. That tells you everything you need to know about where this cycle is going. And he has nailed it here. Wow, what a day! Trading was halted across many of the CME markets. This is a Chicago Mercantile Exchange. This includes futures, derivatives, currencies, and gold and silver. And right away after this happened, whether this is the issue or not, it doesn't really matter. I'll show you later. All the silver people came out and said it's silver that broke the system. They shut all of this down because silver is out of control. And that is a reasonable possibility. We've got very, very low stocks in London and so on. The supply-demand fundamentals for all of this is, so it was blamed on a cooling issue, that this data center had exceeded its capacity to cool. Now, there's some good evidence that may be the truth, but I'm going to show you later that it does not matter. But this was an exciting day, and there's some other things. Silver has basically done a breakout, so you need to watch this to the end. Anyway, we need to cool off the silver market, reposition to avoid silver exploding higher. So this is the translation, a cooling issue. Actually, I'm not sure if it was silver that caused this. I don't think so. But like I said, it doesn't matter. But all of the silver people came out and immediately attributed it to silver breaking the system instead of the system just breaking. Anyway, Gray Rabbit Finance, Hansa Czerny, and he could be right. Hansa has had some great information lately. Shanaka says that it wasn't the silver breaking the market. It wasn't a cyber attack. It was basically that. And by the way, 90% of global derivatives trading stopped. Not hacked, not manipulated. The cooling system failed in a single data center in Illinois. And he goes into the amount of power that this is sucking, and that these servers, this data center, was actually designed for 2015 capacity, and it really hasn't changed. And here it is, 2025, and the amount of data going and processing going through this far exceeds it. But this is the tweet that I would like you to read. It is long. We will try to include the link at the end or down in the notes below. But silver's bull run hit a CME circuit breaker, but the cycle won't stop. And basically, Ben Rickert is putting out the evidence here of why this cycle won't stop. And the great part is down at the end here. He says, money is unraveling. He means currency here. Money is unraveling, confidence is eroding, price signals are returning, and silver, which is money, is the underestimated monetary metal. Monetary means money, is leading the way. The bull run didn't pause, the exchange did. That tells you everything you need to know about where this cycle is going. And he has nailed it here. Please read his tweet. It's long, but it's not that long. It's going to take you 2 minutes. So now they haven't even started the shenanigans yet this month that they were doing last month and the month before. So this is from Nick Laird at Gold Charts R Us. On 9/13, gold margins were raised by 6.7%. If you remember back then, gold was moving first. Silver wasn't taking off yet. It wasn't breaking into brand new all-time highs like it is now. So that was 9/13. Then 9/25, they raised gold margins by 6.3% and silver by 6.7%. And then 10/9, they raised gold margins by 5.9% and silver margins by another 9.4%. Then 1016, just a few days later, a week later, they raised gold by another 5.6% and silver by another 8.6%. And then on 1023, gold and silver by another 5.3%. They haven't even started this shenanigans yet. You're going to want to hang on until the end here because I'm going to show you how this reflects on the 70s bull market. Now, in looking at the price here, we are up at some amazing territory here. We're right near the highs while this is being recorded. But if you look at this, the orange line is the 50-day moving average, and look at the support that it has given this all the way across. The green line is the 10-day moving average. And the 10-day moving average, you'll notice on uptrends like this, that it gives great support on uptrends, and when it breaks it, we're in a little pullback. Well, it's given great support now every once in a while. Gold and silver and almost everything else in the markets needs to come back and visit its 200-day moving average. But that is a much more rare event. So we've visited the 50-day 3 times here. We've visited the 50-day. It's worked off its overbought condition. So now it's sort of free to run. And it looks like it is. We've done a breakout. And this is we are over 3% above the previous highs here. And that is confirmation of a breakout. Here it is on my own website, GoldSilver.com, 56.53. And then the main point, though, isn't to pay attention to all of the short-term noise. Yes, some servers probably overheated. It probably wasn't silver breaking the market, but I don't know that. I can't confirm it. Maybe it was silver, and maybe this is all an excuse. I doubt it. But because they didn't pull the other shenanigans yet. I'll get to some even greater shenanigans that they can pull when I do a comparison of today's market to the 1970s. But keep an eye on the big picture. In September, I drew you these charts. This is the big 45-year cup and handle pattern that I believe I was the first one to identify, but it hadn't broken this yet and confirmed that we were off to the races. Here it is in linear format instead of log, just to show. This is the big old beer stein. Cheers. But in keeping an eye on the big picture, I want to compare this to the 70s bull market. So here you've got 1979, the last year of the 70s bull market, because it ended January 18th, 1980. So this is to January 19th, 1980. And it was 49.45, all of these, because Stock Charts doesn't have the intraday data, but that was the close. It actually reached 52.50 intraday. But if you look at what's going on here, it was rising and rising and rising. Now the Hunt brothers had a major concentration in the silver market, and it is my total belief that because the Federal Reserve was involved in some of these decisions, Paul Volcker, but it is my belief that that gold was in a runaway, and that threatens the survival of the dollar. The dollar had only been a fiat currency for 8.5 years, and they were trying to get gold under control. But gold is a huge market. It takes a lot. Now, in the silver market, it was I don't know the exact size back then, but it was around 1/300th of the size of the gold market, something like that. There are times, though, where it's only like 1/30th of the gold market instead of 1/300th. It was much easier to control. And then the Hunt brothers had a major concentration. So they had basically a scapegoat, and they had somebody that had a major concentrated position that they could break if they kept on changing the rules. So they went up and they kept on increasing margin requirements and increasing margin requirements. But still, it did a breakout, So here we have roughly $6 at the beginning of 79. And then we've got 1750, higher than 1750 here, in September. And then at the end of November, just like today, this is, what was that, 43 years ago, something like that. It did a breakout and started a run, and they would increase margin requirements and increase margin requirements. And then they put in position limits. A futures contract is 5,000 ounces. They put in a position. You could only hold so many futures contracts. And that caused major players that had very large positions to have to dump a whole bunch of their silver. But that didn't stop it. And it kept on running and running and running. And then they finally had to put in a rule, liquidation orders only. Now, we haven't started any of this shenanigans yet. Now, in my study on this, I mean, I'm dyslexic, and I couldn't read this many books, but I bought a stack of books this high. And the best one of them was called Manipulation on Trial, and it was a study of how the government and the commodities exchange broke the Hunt brothers with all of these changes, especially the position limits. And this actually caused the bankruptcy of Engelhard Refinery. It was a huge scandal, and there were trials afterwards. But they couldn't prove anything. But during these trials, it was found that most of the people running the commodities exchange were heavily short silver, and they were being driven. Basically, if they hadn't stopped it, they eventually would have gone bankrupt. So the people that make the rules of the game were short silver, and something had to be done. But also, gold was in a runaway, and we came very close to losing the US dollar back in January of 1980. And so if you can crush the silver, a whole bunch of people that trade silver also trade gold. All of the brokers that do gold and silver trades do both. In the commodities exchange back then in Chicago, in the Chicago Mercantile Exchange, there were pits, circles of guys doing hand signals and screaming at one another and doing all of this trading. And the silver pit is right next to the gold pit. And don't you think, like on a bathroom break or something, they talk to each other? And don't you think that the gold guys go, wow, if they can do that to silver, we're next. And gold and silver peaked on the same day. They put in a rule called liquidation orders only on silver, and that is a rule that says until this rule is lifted, the price of silver can only go down. It means that you can close out existing futures contracts, but you cannot buy a new futures contracts. If there are no buyers and all you've got is sellers closing out old deals, that means the price has to fall, period. And so this is a rule that says until this rule is lifted, the price must fall. And don't you think the gold traders go, oh my God, we're next? And they all said, sell. And that's when gold and silver peaked and the dollar survived. Now, history is repeating, and it is interesting that this breakout is coming on approximately the same day, 40-some years later, as it did back in November of 79. And we may be off to the races. So it's possible by next January we could be seeing some very, very high prices in silver. But to account for the expansion of the currency supply, to account for the growth in GDP, perhaps we need to move this decimal one place to the right. I want to thank you for watching. We'll see you next time.